Hi everyone, and welcome back to my channel, Financially Fit with Katie. I hope you're all doing well. I hope you're enjoying the summer. What I wanted to do today was just go through and give you a couple of tips for better money management. So these tips are gonna allow you to plan for a financially fit future. So what I'm gonna go through today is setting goals, creating a budget, tackling your debts, and saving more. So let's get started. So first off, setting your goals. I cannot stress how important it is to review your goals at least, once a year. But I would, recommend probably looking at it maybe twice a year and keep those goals, write them down and keep them somewhere that you're going to look at them periodically. And the reason I say that is it will allow you, especially if you have had issues with managing your cash flow, or maybe you tend to overspend and you're lacking on what you're saving. If you can visualize these goals of what you're trying to plan for, and you can think about that as you are setting up your savings or going through budgeting, it will allow you to get to those goals quicker. So, and they could be anything from, finally creating that emergency fund, or putting aside money for a down payment for a first house. Maybe you're planning a wedding and you're putting money aside. So it does not matter what those goals are, but you do want to look at them and separate them out as your short-term goals and then those longer ones. Next, you really need to create a budget. I like the 50-30-20 budget. I will have links in the description, and also there is a full separate budgeting video on here. So if you have not seen that, you should go through that, because I go through and walk exactly how you should set up that 50-30-20 budget. Now, along with the budget, what you're going to want to do is, whether it's within your bank account, or if you're using credit cards, or if you're using a separate cash flow tracking app, say like a mint.com, you want to make sure that you go through that, because you need to print out. And I would say right now, we are 6 months into the year. I would take a look at how have you done from January until now, add those numbers up, look at what has come in for income, what's gone out for expenses, update those numbers within the budget. And then, make any tweaks that you need to do so that from now through the end of the year, you can have a strong finish, and then reevaluate at the end of the year for the start into January. Next would be to tackle your debt. So if you, have credit card debt, student loans, car payments, maybe you've had to do a personal consolidation loan. What I want you to do is go through and actually write out what each of the debts are. I want you to write out the balance, the interest rate, and the minimum payments due. And so I want you to take a look at all of them, and then come up with a plan of, I usually will advise my clients, I like to go through and tackle the smallest balance first, pay minimum payments on everything else, double up on that smaller payment. Once that debt has been paid off, taking that payment and applying it to the next one. Now, some people will have you, pay off the higher interest. It doesn't matter, which way that you're doing that, as long as you've got a plan in place. Now, the reason that I like going after the smaller balance, it allows you over time to really maximize and increase what the payments are to the other debts. And it's fulfilling when you can cross it off and say, hey, I just paid that off. It makes you feel good. That momentum or, enthusiasm of knowing that, hey, I no longer have that debt, that goes a long way too. So again, it doesn't matter which strategy that you're using, as long as you are planning that out and enter those figures on your budget to really see what you have. And lastly, save. You really need to make sure that you are paying yourself first. So if you're using that 50-30-20 budget, that 20%, that is to go through, what debt payments you have and then savings. At a minimum, I like to see clients saving 10%. Now, if you can't do that based on other debts, that's okay. We'll start out small. As you are able to pay off debts, as cash flow is increasing, we're gonna adjust those numbers. And what I like to have my clients do is, set up systematic savings. So a lot of times through your payroll company, you can have money that is direct deposited directly into a checking account, and maybe that's what you pay all your bills. You can then have a certain amount that will go into a separate savings. I like having clients utilize a savings account that's not as directly accessible, that they'll go to the bank to take all that money out. Having it set up so that it's linked to the checking account, whether maybe like a Capital One 360 or an Allied account. Some of those that are a little bit out of sight can allow you to really build up that money, but have the monthly savings go directly in so that you do not need to think about that. And over time, you're going to build up that cash reserve. You're going to be able to now implement second layer cash savings. Maybe you add in Roth IRAs, but it really starts from making sure that you are saving first and you're building that foundation for yourself. So I hope that, this helped you. Whether one of the tips or all of them, my goal is to get information out that, even if not all of it, hopefully there's something that you can take away from that. If you have not subscribed to my channel, please hit the link below. That way you'll be notified when new videos are posted. And then also share, if you have a coworker or a family member and you know that they might be struggling right now and they need to, they don't really know where to lean to, share these videos with them, and I hope that, they'll find some useful information. And lastly, if you do have questions, my contact information is listed. Please feel free to reach out to me, and if, I'll help you in any way that I can. So until next time, everyone, stay safe, be well, bye.